And now you're having one rejection. So that's why I said it's not beyond the realms of possibility. You get a little bit of froth blow off. Some weekends definitely on the leverage side, which is why I say to the blue pot people, I haven't disaccumulated any precious metals. Just to qualify, I moved country once, so I sold a silver holding that I didn't want to transport, and I immediately replaced it in another jurisdiction. Apart from that sale, I didn't disaccumulate at the investment level gold, silver, or platinum, and I include platinum in that. I'm quite bullish platinum at any point, and I continue to add to it. So my weight by metal continues to grow, and my overall opinion is that people should sit on their hands now and get ready to get a bit of a discount window that might be offered in the next month. It could be 2 months, could be 3. We'll be monitoring that.
Could a major buying opportunity be approaching for precious metals investors? Francis Hunt believes the next few months may offer a rare chance to accumulate gold, silver, and platinum at more attractive prices. Hunt argues that recent market action may create a short-term discount window for investors before the broader bullish trend resumes. While acknowledging volatility and leverage-driven selling, he says he has not reduced his long-term holdings of precious metals. His only significant sale was related to a country relocation, and he immediately replaced the silver position in another jurisdiction. He remains especially bullish on platinum and continues adding to his gold and silver holdings. Hunt advises investors to remain patient rather than chase prices, as better entry points may emerge over the coming weeks or months. He believes the long-term outlook for precious metals remains strong despite temporary market fluctuations. Now, we present the clips from Francis Hunt's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
Strait of Hormuz kind of really got hot on us in February, and we had the peak in the end of January with gold and the run-up. It was moving very, very quickly. Round about the tail end of 24, we'd said $2,000 is going to fall for the first time on a sustained basis, and we're going to run higher than 3,000 was the target. And not only did we do 3,000, but we had more setups along the way, continuation, and the top out was actually 5,600. So one of the most important things for everybody to remember, I think, in all of this, Maggie, is that we've had an exceptionally good run, and it's only a small leg in what I see an ongoing good run. I'll make reference to the chart, but overall, to give the short answer to your question before I get too technical on charts, people shouldn't lose too much faith, but it's also not going to be over in a second either in terms of the pullback. And you'll see when I refer to that technically, we've got shooting stars, which are actually exhaustive and reversal moments. So we could have a more prolonged pullback because of what we did. But in the longer run, we will base out and reassert. We expect continuation rather than this being a top. Same goes for silver and platinum. So there's a technical and a fundamental narrative potential to both. So I do watch both, but I'm predominantly decision-based off charts, which means the technical answer is where I refer to first. And then there's also a fundamental assessment. When they diverge, I get concerned whether I've got my facts straight or my chart reading straight. So I like to see a certain degree of alignment through both arguments. Then there's the trader, which is where you use leverage and you go long or short. And then there's the macro investor, which I refer to as blue pot. So we sort of have blue, orange, and red. Sort of orange means a little bit of leverage, and red means shooting for the moon. So everything I'm saying now is going to be on the blue pot level. And your question is, should people be buying? In other words, is it an opportunity to accumulate on the blue pot level for me? So that's how I'm interpreting your question. And I'll just highlight on the charts, and I'm circling this particular candle. What's really interesting that we're speaking today, Maggie, it's actually incredibly fortuitous. We have baked in the 6-month candle, literally. That means that candle is hard baked. So it's not going to move much. That is 6 months of trade for this year. And obviously it captures the January super surge that saw us go 5-6. It also captures the full rejection thereof and a little bit extra put on to the downside. That particular candle is known as a shooting star. And when I always like reverting to the big time frames when you get a little bit of confusion, market confusion. It's not plain sailing. It's quite easy to see that is a medium-term now rejection. It's not a short-term rejection. What typically follows those kind of candles is another red candle of some form because of that momentum to the downside, which brings me into the story potentially of the AI, the risk off, and a major tech bust, because I don't think you force gold down that easily. In fact, talking fundamentally now, the last 5 months, the reason America didn't run record trade deficits with China is because of huge amounts in the product section. So there's products and services. The largest amount in the product was gold exports to a combination of Hong Kong and Switzerland, which often sees further refinement, and on to China as well. So the money is going east, as we've warned many times before when we've shown up with you, which should be a concern for most Americans. You're being hollowed out. The good stuff is being picked off. The Chinese don't want the treasuries. They don't want the dollars. Inherently, anything they're building in surplus, they are rotating into precious metals. So they are utilizing it to buy. So you could argue they are blue pot buying. Other central banks are also expected to be accumulating. They aren't perfect bottom callers, however. And if we're to have a real further contagion, which I anticipate is possible, you will see another red candle potentially here. The best outcome, if I was just to be a guessing man and draw you an outcome for the next 6 months, the best outcome for us would be another small body candle, but with a big rejection wick to the downside. That's how you would negate that. So if you traded down to 3.3, for example, and reversed back up, what you've done is you've given an echo exactly as what brought the fear and the danger, the shooting star, and said, not any further, buddy. And in fact, if you're coming down here, we're having all of it, and we're going to add a little bit on the other way. So that would negate the shooting star, and that would be called a hammer. It could happen. The first 3 months could be the downside. I think between now and October, the sell in May, I think when we last time saw you, we said sell in May, go away. We said new Fed chair, typical bad trend for a lot of clearing. And we also highlighted the bond rates and a lot of downside other risks. I'm trying to remember the third and the fourth point, but we gave 4 points why you should be pretty cautious mid-off because of the seasonality, the Fed seasonality, and then generally the precarious hypervaluations of the stock market, the listings, and various other things that have been going on. So overall, this is not a great time to be leveraged long too much. That's one of our primary theses. We think there's going to be opportunities to the short side, but that's for traders. So if your primary audience is blue pot investors without leverage, I think the buying moments are coming, but maybe you'll get a slightly better price still to come in gold and in silver in the short, medium term. So if you're dollar cost averaging, carry on. You're doing great. You're going to keep buying lower into a potentially softening trend. If you're going to put in a massive lump sum and you've really it's a substantial amount, you might want to add a bit more timing onto that. Potentially, you could get a lower entry price. I don't think it'll be outrageous, however.
Yeah.
But that's one of our positionings.
Gold, silver, and platinum remain at the center of a changing market landscape as investors navigate volatility, shifting sentiment, and macroeconomic forces. Recent price action has drawn attention, with technical indicators suggesting short-term consolidation, while longer-term trends continue to point towards strong interest in precious metals. Central bank accumulation, growing demand from Asia, evolving monetary conditions, and stretched equity valuations are creating a backdrop that many market participants believe could support hard assets for years to come. The analysis explores key chart patterns, market structure, liquidity flows, and the factors driving both bullish and bearish scenarios. It also addresses risk management, capital allocation, and the need for a disciplined investment strategy during periods of uncertainty. As global markets react to economic data, interest rate expectations, and changing investor behavior, precious metals continue to serve as an important indicator of broader financial conditions. Let's get back to the interview.
So what's actually happening is the ability to repress and marginalize gold as a key reserve asset is reducing. That's what the chart is showing me. So the sideways pause area, the most successful period was post the boom of 81. And essentially we had 20 years. right the way through to the year 2000 when gold bottomed and started to turn. Then I will highlight you had a very sustained and lengthy bull run that was incredibly beneficial from $200 to 1927. Almost 2000. You're talking about a 10x move within quite a reasonable time, 12 years, 10 times up. I think most people will take that, Maggie. It's a very good return.
Yeah.
It sounds like a long time to wait. The young guys need to slow down. The older guys are okay with that. Then the next pullback period was shorter still by quite some difference. So that question I've had asked before, and it's one I'm used to answering. So there's your duration of negative period to be holding metals. It wasn't a good hold. You've got to own that and accept that. You can't be a perma gold bug. It was much better to be leveraged tech equities during that period. Then you have this period over here into in fact, 2016, the Shanghai Accord with the China issues was the bottom, but you can argue you only properly technically broke out around here. That is quite a lot less by duration period than the 20 years you had here. We're talking around the highs of 2011, 2012, mid 2011 to, 18, you were already coming up quite strongly. Then you had 3 years where 2000 was the rejection. You may recall me saying once, twice, 3 times, and then a lady, in tribute to the old Lionel Richie song. If you remember that, if your 80s hits are still ringing in your heart, Maggie. But then once you got that, it's a much shorter duration. So you've got 20. Here you've got let's say 11 to, it looks like 19. You've got about 8 years. So you've gone 28. This was 3. And now you're having 1 rejection. So that's why I said it's not beyond the realms of possibility. You get a little bit of froth blow off. Some weekends definitely on the leverage side, which is why I say to the blue pot people, I haven't disaccumulated any precious metals. Just to qualify, I moved country once, so I sold a silver holding that I didn't want to transport, and I immediately replaced it in another jurisdiction. Apart from that sale, I didn't disaccumulate at the investment level gold, silver, or platinum, and I include platinum in that. I'm quite bullish platinum at any point, and I continue to add to it. So my weight by metal continues to grow. And my overall opinion is that people should sit on their hands now and get ready to get a bit of a discount window that might be offered in the next month. It could be 2 months, could be 3. We'll be monitoring that. But to answer your question, the durations of rest periods is shortening, and that's because the fiat and debt-based collapse that we referred to immensely in previous appearances with you is more critical and more chronic than before. And the actions of China and, of course, Biden on the confiscation and many other events are moving towards a gold-warranted, vaulted type system by the largest producer nation on the planet. That is incredibly supportive, and the price data is showing that. This is not a Francis Hunt constructed narrative. You can do this calculation for yourself. There were the last pause, and then you were breaking out there. That was your 3 years. It is getting shorter by rest period, and it is moving immensely once it goes.
As the market continues to evolve, investors may find patience, discipline, and careful observation more valuable than chasing short-term price movements. The opportunities that ultimately deliver the strongest results are not always the most obvious in the moment. They often develop gradually and reward those who stay informed and maintain a long-term perspective. The landscape for precious metals and related investments remains dynamic, with multiple factors influencing sentiment and market direction in the months ahead. While volatility can create uncertainty, it can also create opportunities for investors who focus on fundamentals rather than daily market noise. Building a successful investment strategy is rarely about predicting every move correctly. Instead, it is about understanding broader trends, managing risk effectively, and remaining consistent through changing market conditions. We'll continue to bring you in-depth analysis, market updates, and valuable insights to help you stay informed about the most important developments affecting gold, silver, mining stocks, and the broader financial markets. If you found value in today's discussion, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss future updates. Thanks for watching, and we'll see you in the next video.